Hey everyone, welcome back to my channel. So today we're going to talk about savings versus investing. This one is something that was eye-opening for me as well because I just recently made a new investment that is making me so much more money, and it is really changing my mind on how I think about this topic. So before, I was making a lot of money and I was also investing it in assets that produce income, cash flow, but also had some debt, real estate, i.e. one of them, that carry some risk. And so to divert from that risk, what did I have to do? I had to save more money, and I ended up saving more than I ever have in my entire life. So I saved so much money to the point where I woke up in 2023 and I said, whoa, I have literally way too much saved. I need to invest more or just pay off the property. I don't want to pay off the property because the interest rates are too low. I don't want to invest more because I want the savings for an emergency fund or a rainy day. My emergency fund is already built up, but I still have additional savings that I'm not deploying. Why is that? So all these things were eating me up inside. I didn't know what to do. I want to invest more because I know I can make more profit. But interest rates in the savings account right now is 4.5% to 5.4%. And I can make what I've been making in the stock market, which is 35%. And if you don't think I'm making 35%, go ahead and watch my last video on what I actually earn in the stock market, and you'll see that I make 35%. So this was tough because, again, my emergency fund is already built, but I'm saving money, saving money, saving money. And of course, I'm looking at potentially buying real estate. But I know that I can easily deploy this money into the stock market right here, right now, and I'm not doing it. Why is that? Well, it's because of fear. I'm not going to lie to you. So savings fund already built, but you're not finding that deep sale. You're not finding that deep opportunity that gets you out of that fear. So in my savings account, I was generating more than $2,000 a year just in savings. I recently just made an investment that generates about 14, maybe 1,300 a month. And because of that, it makes me think, like, as much as I save, in 2 months, my investments will beat that out. I mean, it makes no sense, right? So, like, I'm thinking about the $2,000 that I would get in my investments, not accounting for inflation, just by keeping the money sitting there. But it's really not generating anything for me compared to what I'm earning and what I'm making from my investments. So I should deploy more. I should put in more towards the investment side. So I would never tell someone to forego their emergency fund, which I have done twice for investments only. Luckily, I haven't had a life-altering experience when I did those things, and I was able to grind very, very hard in order to build up cash reserves very, very quickly. And it typically took me 5 to 6 months every single time before I was really, really on my feet and able to do other things after that investment was profitable and doing what it's supposed to do. And I've also never had a bad investment when it came to me liquidating everything and putting it all into my investments. So I've been real lucky in that regard as well, doing a lot of due diligence, understanding my numbers, and then finding the right tenants as well as the right stocks to invest in as well. So again, I've liquidated my savings account twice completely to buy real estate. And I did that once in the stock market with Acorns and never since. So all my stocks I've always kept. So when I say I'm broke, that does not include my stocks, because I'll be broke and I'll have tens of thousands in the stock market, and that's okay. I have over 6 figures in stocks. I showed you one of my portfolios, but again, I have 401ks, Roth IRAs, and then my individual stock market accounts. So what I would suggest, I always suggest at least 6 months of expenses saved. There are some people who say you need only 3 months of emergency expenses saved. I disagree. Here's why I disagree. With 6 months of expenses saved, you will be able to counter most emergencies. You should have insurance on your car. You should have insurance on your house. Even if it's renter's insurance, you should have insurance on your rental that you're renting. You should have insurance on everything, especially if you have no money. So if you have no money and you have a daughter, a son, a wife, or a husband, you should have a life insurance policy as well. And, you know, as you have that 6 month emergency fund, you can then grow from there. A lot of the times I negate telling you that you should also have a be debt free. And when I say debt free, you should be debt free, eliminate all bad debt. So in eliminating all bad debt, you should not have to worry about allocating resources towards bad debt. And if you are allocating resources towards bad debt, then you might want to get off of the high horse of just going into your emergency fund and doing that. So one, you want to eliminate bad debt as soon as possible. If it's a student loan, you want to take that out incrementally. I know Dave Ramsey is going to tell you to go full steam ahead. If it's under $20,000, you can definitely do that and get out of that as quickly as you can, especially if you pick the skill set that is going to be very profitable and marketable for you. You can find roommates in the short term if you just graduated in college, or a supporting spouse or partner, and you can go ahead and kick butt and get out of that quickly. You can devote yourself to that for about 10, 20 months, and you should be out of that very, very soon. I am a firm believer that if you want to get out of bad debt, you can do that within 2 years. If you want to get out of bad debt, you can do that within 2 years, because I know that a bank will never lend you money that you can't pay back. It's just that simple. They have their own math. They're going over it, and they're making sure that you, as a customer, cannot take out more than you can afford. That's why a credit card has a limit, or else people would be in $200,000, $400,000, millions of dollars in credit card debt. I mean, you know, I know people who are in debt so much and still wanting to take out loans. They can't pay back what they owe, but they still want to take out more loans. They want to borrow money that they've never had and they don't intend to pay back. It's insane. Instead of stealing from one person, they want to steal from another. It is insane. Insane. In fact, they feel no guilt, no remorse, and that is exactly how they want to live their life. For that reason, you can't help people like that. When I realized that is the thought process of some people, like, you just can't help people like that. So, first step, get out of debt. Second step, build up that emergency fund at least 6 months. Then, when you have 6 months of emergency fund, you can now look to start investing, getting cash flow, being profitable. And then I don't want to forget, for those out there who love equity, make sure that you are cash flowing even in the slightest, but you can go after equity if that's something that you want. My channel is not a channel of equity. It's more about cash flow, passive income, making money while you sleep. So if you like that type of stuff, feel free to like, comment, and subscribe. But what I will say, what's better, saving or investing? Well, it's definitely important to have your 6 months of emergency fund. The next step is to invest every and any chance you get in order to make the most money that you possibly can. If you like this video, make sure you leave a like, comment, and subscribe. You know I post every single day at 8 a.m. daily, and I can't wait to see you in the next one. Peace.